Alright guys, what is going on? Welcome back to another video as always. I hope you guys are having a fabulous week as always. And as usual, if you're new to this channel, I welcome you guys in, joining us in our community as always. Hit the subscribe button down there if you haven't already. Just to stay tuned for more information on, stocks, entrepreneurship, and a whole lot of other financial stuff. So be sure to subscribe. And without further ado, let's just get straight into our video today. So if you click on this video, it's because you are wondering how ETFs work, or what exactly are ETFs and how they perform the way they perform, and what makes them a little different compared to, stocks and whatnot. Okay. So better yet, what is an ETF? Or as we like to call it, an exchange trade fund. Now, an ETF is basically a basket of securities that you buy or sell through a brokerage firm on a stock exchange, okay? Now, they are virtually offered on all asset classes, ranging from traditional investments to alternative assets like commodities or currencies. And it's also one of the most valuable and important products for the recent investors in the past few years, as if you're investing in one of these really nicely and do it well, it can usually generate you a lot of great wealth throughout the course of the few years that you've been investing with an ETF. They also offer many benefits, and if used very wisely, it can definitely help achieve many of your financial goals at the end of the term, and which your goal is at the end of the day, okay? So be sure to be wise with these whenever you're picking which ETFs you want to invest in. And I guarantee you're going to see some great returns over the course of the few years. In addition, innovative ETF structures allow investors to short market, to gain leverage, and to avoid short-term capital gains on taxes. So these are very few of the many benefits that you can get with investing with ETFs compared to mutual funds or anything like that, or bonds even. And they basically carry a mixture of bonds, stocks, or any other type of investments out there. It just depends on the ones you really pick out there at the same time. So how are ETFs created? Now, we'll do a short little summary right here on the past of it. But they basically began in earnest in 1993 by the product commonly known by its ticker symbol SPY, or Spiders, which became the highest volume ETF in history. And there's an estimated to be over $1 trillion invested into these ETFs. So it just goes to show you how much people really love these ETFs and why they pick these certain ETFs to invest with in mixture with their stocks, bonds, or mutual funds at the same time, okay? Now, what type of ETFs are out there? So I'm going to name a few right now and just do a little description on some of them, but I don't want to get too deep into it because this is just simply, the basics of ETFs and whatnot. But if you're interested in me breaking, the ETFs down little by little, then leave me a comment down below and, maybe I'll work something out on that. Now, there's market ETFs which track a particular index, and the S&P 500 or the NASDAQ. Bond ETFs designed to provide exposure to virtually every type of bond available, such as U.S. Treasury, municipal, corporate, international, and a few others as well. Then there's sector and industry ETFs, which are designed to provide exposure to a particular industry, such as oil, pharmaceuticals, or high electricity. So again, there are many different types of ETFs, so I didn't want to name too much at the same time, but essentially, there's more ETFs in that, but I don't want to get too deep into that. But there's almost an ETF for anything you can imagine, like real estate, gold, anything out there really. So again, research some of the ETFs you are thinking of investing with. Do your research and see which suits your portfolio more better for you. Because not everybody will have the same exact portfolio either with these ETFs. It's your choice and your job to also make sure you know which ones you're picking out for yourself, okay? It's your money, not anybody else's. Now, how do ETFs actually work? Well, they're basically like a stock. You can buy them, sell them throughout the day whenever the market opens, just like a stock would. So that's probably some of the similarities that these two have like that, is that you can just buy it or sell it whenever you please, as long as you have the money for it, of course, okay? Now, some of these ETFs do tend to be pretty pricey now, but usually when you go with a brokerage that, purchase it through partial shares and whatnot, that's how you're able to get the most out of your money with it. That you don't have to waste, $100 to $300 just for one share of that ETF also. So that's another good thing about these things. And just like a stock, an ETF also has a ticker symbol and provides certain data analysis that you can read upon, just like a stock, just like you would a stock, I mean. Now, unlike a company stock, the number of shares outstanding of an ETF can change daily because of the continuous creation of new ETFs, of new shares, and the redemption of existing shares. Now, the ability of an ETF to issue and redeem shares on an ongoing basis keeps the market price of ETFs in line with these underlying securities. Now, some of the advantages of ETFs is that you can, as I mentioned earlier, is that you can buy and sell them anytime during the day. unlike mutual funds where you have to wait till they settle after during the day. So this gives you a more, choice and option of when you want to keep it or when you want to sell it and all those good things. So it gives you a little bit more control as far as your portfolio and whatnot. They also offer low fees, but you might also have to pay for, your commissions from your brokerage and whatnot. But that'll be a separate thing. And they'll let you know or not what you will owe and all that stuff. But I mean, compared to some of these other type of investments, ETFs usually offer really, really, really low fees. Now, another one of the best things about ETFs is that they're more tax efficient. And it just gives investors better control over when they pay, capital gain taxes and whatnot. So you're able to, maybe bypass some of these things. It just depends on how you have it set up and how you handle it and, just how smart you are with them. So unlike stocks where you usually have to pay a certain percentage, with some ETFs, if you're able to bypass some of these capital gain taxes at the same time. So that's another good advantage of ETFs is the taxes, because we all know Uncle Sam wants his piece of the share, So minimizing that definitely helps over the long run. And because they usually trade like a stock, they usually have some better advantage of trading transactions compared to mutual funds. Whereas with an ETF, you can actually put stop losses, you can put limit orders, stop loss orders, buy on March. I mean, you can't do these things with mutual funds, but with ETFs, this gives you more of an option with these type of things. Now, not everybody will do these things, but if that's you, then this will probably definitely benefit you over the long run also. Now, while these advantages may seem good with the ETFs, it also comes down with some disadvantages at the same time. So let's break it down a little. One, illiquidity. Some thinly traded ETFs have wide bid/ask spreads, which usually means that you'll be buying at the high price of the spread and will usually sell at the low price of the spread. So, I mean, when you want to take more advantage of your money, buying high and then selling low is really not usually a good thing. But again, I mean, compared to some of the advantages that it has, this might not be as bad compared to that, but again, it just all depends on you and how you are as an investor and what your terms of goals are, are necessarily. So everybody's opinion on this will be, highly different. And really just one more disadvantage that I really found with ETFs is settlement dates, meaning that when you sell an ETF, it's usually going to take you at least 2 days for that transaction to complete. So if you're thinking of reinvesting that or doing something with that money, you would probably have to wait at least a 2-day period just to, mess with that money back again. But at the same time, I mean, if you're more in the long run with this, then you really shouldn't be worried about these type of little things. And to really just sum it up with ETFs, I mean, you can really break it down like this just to make it even more simpler. Take certain stocks, for example. With stocks, you have to do more deep research on a certain company that you're researching. You have to spend more time on how they're performing and whatnot, as compared to an ETF, where it's basically just a basket of different stocks and bonds. So it just rounds up how they're all performing, and usually just rounds up a number, and from there you'll get the certain price and how it's doing and all that. Now, one good thing about this is that, let's say for example, you pick a stock that you want to invest some money in. Well, let's say that stock is doing pretty bad, and because you invest into that one stock separately, you single-handedly pick that stock and it's doing poorly, then obviously your money's going to feel the poor damage from that stock that you invested in. Now, compared to an ETF, let's say you pick an ETF where it has that same stock you wanted to invest with, but since it's broken down to a lot of different companies, now let's say that stock is doing bad on its own, right? But you bought an ETF that has that stock in it mixed with a bunch of companies. Well, even if that company is doing really poorly, that won't matter too much on your performance, because again, it's mixed in with a lot of other different companies at the same time. So while that stock may be doing really terribly single-handedly, it won't affect your ETF, purchase at all that much. Because with an ETF, if the other companies are doing really good, then, that one little stock, it probably won't even phase it at all. But at the same time, you gotta also think about it like this. If you single-handedly pick that one stock by itself and it's performing really amazing, and maybe you, I don't know, gain a 20% profit or something like that, now you're going to be thinking differently from here. Because by picking that single stock handily, and it's doing really amazing, now you're getting all that profit from it. But if you picked an ETF with that certain stock at the same time, instead of picking it separately, even if that company is doing really amazing, you're only going to get a percentage of that profit. You're only going to get a percentage of that amazement with it, because it's mixed in with a bunch of other stocks and bonds. So you won't fully get the full advantage of that company. And that's really the thing with ETFs. If you want to play a little bit more safe and you just don't have the time to single-handedly pick certain stocks, then an ETF might be a good choice for you to start off with. And it's usually what I suggest people to start off with when they begin investing in the stock market, just because picking a stock may be a little hard, or just time consuming, and plus it carries a less risk, like I said. Whereas if you pick the single-handedly stock, then you'll obviously put a little bit more risk on yourself. So if you're more of a less tolerant risk person, then ETFs are a great way to start off with also. But anyways, guys, that's just gonna wrap it up for today on today's video. If you have any questions or concerns on an ETF or anything like that, leave me down a comment down below and I'll try my best to answer it. And again, guys, if you're new and watching this channel right now, I highly welcome you guys into joining our community here with our other fellow subscribers out here, just by simply pushing that subscription button down there, and make sure you push that little bell so you're notified on when more videos are coming up. And that'll wrap it up for today, guys. I'll see you on to the next video during the week, and I'm out.